Hey everybody, this is Seth Kneep, Keeping It Real. Super happy to be back in Austin, Texas, even though I'm not super happy about the fact that right now it is 23 degrees Fahrenheit. And I know those of you guys who live in Canada think that we think you live in igloos, and I know that's because you do. No, I'm just joking. But it is cold here. I'm so happy to have Jeremiah Kovacs here. He's actually going to be speaking at the summit. This guy knows accounting, and he helps Amazon sellers with their accounting. So Jeremiah, thank you so much for being here today, brother.
Hey, happy to be here. Excited about the time we got together.
And you guys are east of us in Louisiana, you were saying.
Yep, down here in Louisiana, it's about 20-ish degrees down here as well. So it's been a few generations since we had snow twice in the same winter. So it's pretty wild down here right now.
So for those of you guys who live in the southern part of the US or middle to the south, when it comes to cold, we're complete babies. It was supposed to snow the other day in Austin, and everyone freaks out, and we have a snow day where the kids don't go to school, even though there's no snow. Well, the grass is crunchy. So, well, hey, thank you so much for being here today, Jeremiah. As I said before, he's one of the speakers at the summit. If you guys are going to be in Las Vegas in March, don't miss it. We have over 20 workshops, handpicked people from around the world will teach you how to build your Amazon business. And we're going to talk a lot about the new private label. And this is something that's up and coming, and it's really important to understand what's going on with that. So very excited. Jeremiah, thank you so much for being here. I'm just going to jump straight in. Today in this session, we're going to teach you everything we can about accounting. And I'm just asking a bunch of questions. And then after Jeremiah's done talking about it, you guys ask your questions and really ask us, what do you need help with? How can we help you? Because accounting is one of those boring but important topics, and we want to cover it and help you as much as we possibly can. So Jeremiah, here's the big question. What would you say is the biggest struggle most Amazon sellers that you encounter have when it comes to accounting?
Yeah, great question. Well, the biggest challenge is there isn't one. When it comes to accounting, there's so many questions for example, am I going to get audited? What's the minimum stuff that I need to do to make sure I don't get in trouble? I think that's some of the initial questions. Then people start asking hey, how do I not spend, how do I not die as I'm trying to keep track of this? How can I leverage my time so that I can actually go out and market my products instead of just pushing numbers around all day? So I think maybe the biggest challenge is overall is kind of the mental intimidation factor, especially for folks that haven't, don't see themselves as number oriented. I think culturally we see accounting and finances as being a personality type. And a lot of people are like, that's just not my personality type. And the reality is that I think there might be some people who are less intimidated, but overall, I think if you just come to this deal with a little bit of an open mind about how to do it and find some good resources to help you, I don't think this has to be a massive brain suck or a time suck in your business. I think you can, if you get a hold of the right people, and I hope I can help with that today. I think you can in the beginning, as you grow your business, cover your bases, and then as you business starts to grow and you get more resources, you'll be able to invest in some expertise to help leverage this area of your business and make sure that this is not a liability and what's holding you back from growing. So yeah, I'd say really early on, you don't have to worry about having everything covered financially. I think there's just a few things that you just need to get settled, and then once those things are settled, just focus on growing your business. And then as you get larger and you scale up, then you'll have more money and you'll have more resources to focus on more intense accounting stuff. So
that makes total sense. 3 people have already compared it to 3 different things: having to do math, which they hate, a root canal, and having to do sit-ups. So already 3 people have made those analogies. So I'm glad we're here talking about this. So let's go through it super practically, guys, because I know you guys are running these businesses. You're starting up your business. You've been doing it for a while. And like Jeremiah said, you don't want to be in a situation where you get in trouble. You want to make, and also I'm thinking too, on the other side, there's so much money I save when I make sure I record and keep the receipts from business expenses so I don't have to pay as much in tax. because man, do the taxes get insanely huge as you grow your business. It's crazy. It's, you know, there's a lot of money goes to the government. That's why all these people are buying stuff right at the end of the year before the next year. So Jeremiah, how do you break it down? Like, okay, so let's just say someone started the new Amazon store. The money starts to come in. What are the categories for this? How do you break it down? Can you kind of give us a framework for what do we do? How do we start? And what are the categories for expenses and profit and all that?
Sure. So I would say, you know, actually just the very first thing, the golden rule before you get into anything, the number one hack, if you want to, you know, talk hacks or whatever, is if at all possible, try to keep your business expenses segregated into and separate from your personal. So you don't necessarily have to go out and get a business account in your business's name if you want to stay in your personal name and to begin with. You know, whether that's a credit card or a checking account, just 100%, you're going to make your life easier if you just have an account dedicated to your business. So like I said, it doesn't have to be in your business name, could be a personal account, but just make sure you don't commingle personal and business, because it's going to make your life harder, you know, when you're trying to separate all that stuff. But B, it's just a really simple way to make your life easier. So, and then once you do that, once you have an account set up just for your business, you know, from there, you know, you want to start tracking. You want your Amazon payouts to go into that. You want to, if you possible, try to make all your inventory purchases from there. Just make all your businesses, anything to do with your business, you want that running through that account. So just right off the bat, that's going to make people's life easier. And I don't want to assume anyone's already done that, because I've seen businesses that are, you know, running hundreds of thousands of dollars a month in sales, and they still haven't got around to untangling their business and personals.
Yeah.
So
challenge too, right? They could get in trouble if they're not reporting, or they could be way overpaying on their taxes. So let's talk about this for a minute then. COGS versus operating expenses, and then net profit and gross profit and profit margin. Could you just go into each of those categories a little bit and explain them? Because a lot of people get confused. For example, everyone, it's so important. Like right now, I'm talking on a computer. This computer is a business expense. I wouldn't consider it COGS. I guess there's leeway in what you could call it and not. But the warehouse we have to store inventory, that is a COGS expense for us because of the products that we're selling in Amazon. So could you just kind of break these parts down for us, man?
Yeah, sure. So, you know, in accounting, there is a report. It's called the income statement. Some people call it a profit and loss. And the profit and loss really has three main sections. So your income is the top section. So what's really important here in the top of that income statement is you want your sales to be whatever you're what they call gross sales. So before any expenses or any fees or any refunds, what were your sales? That's gross sales. You want that to be at the top level. And then in that section, you'll also have like refunds or returns. So that will be what's called that will just be your sales or revenue section. Right underneath that, you're going to have a section called cost of goods sold, or some people call them direct expenses or something like that. And so that whole section of cost of goods sold, it's really how I think of it, it's any expense that's directly tied to you selling the product. So the purchase price of what you sold, that's going to go into cost of goods sold. Warehouse expenses, FBA fees. I also put FBA sale, like Amazon sales commissions. I also put that in there. And the idea with this section is if your sales double, your cost of goods sold will roughly double. It's an expense, if you have an expense that increases that's directly tied to your sales, you want that to be in this category.
Right. And if I can just jump in real quick, operating expenses not necessarily the same, right? So for example, the internet I'm using for my business, or, you know, my business cell phone, or I'm trying to think of other examples. The fees that we pay for advertising, for PPC, all that kind of, well, no, PPC would be separate, but all the ongoing fees, like for the internet, for tools that we use, for subscriptions, Feedback Genius, those would be operating expenses. And I love this point because what you said is so key. So as my revenue goes up, so do my COGS because they're attached, but my operating expenses don't necessarily have to, or if they do just a little bit, if like I need just more bandwidth or something. Therefore, keeping these down is a huge help to increase my profit because these are more static. They're just constant. But they're also the ones I forget about more often. I don't think about as much because they're always happening. And like, whoa, we're subscribed to 40 different things on the internet that we pay money for, you know? We have like a whole spreadsheet on this.
Oh, yeah. No. Yeah, that's a whole nother conversation for sure. So yeah, the revenue is the one section, cost of goods sold is the other, and those are usually pretty directly tied to each other. And then there's this whole other large section underneath there that's operating expenses, and that some people consider it one large section. So like you said, anything. So the way I make reports for my clients are I turn operating expenses into what I call cost centers. So I lump together similar expenses. So I have like a business growth cost center. So any expense that is not a cost of goods sold. So advertising, I would put in there. I actually put like personal development in there because I see you're investing in yourself to grow the business. That's one cost center inside. Go ahead.
Sorry to interrupt. I just want to make sure I understand. So if I buy a book, let me grab it really quick. 5 Dysfunctions of a Team. This is a book. This helps me to lead the Just One Dime team. What would you call this kind of expense?
Yeah, I call that professional development.
Gotcha.
So, courses, going to conferences, generally, any type of expense that is directly tied to like helping the business grow. I call that professional development.
So going back now, what about having multiple Amazon stores or multiple businesses? Do you recommend each of those be a separate set of books, a separate entity? And if so, why?
Yeah, so if they actually are a separate entity, so this kind of actually will go back to your tax settings as you're setting up your Seller Central account. So if those are different entities, then you definitely need a whole set of different books for each entity, because the IRS is going to want you to report income and expenses specific to that tax ID or that entity number. But it gets a little bit into some gray area when you maybe are trying to you have multiple brands. I'm not, like a lot of private label brands, they might have their home and kitchen brand be one, and then they have their sports and outdoors as another brand. It really is kind of a preference thing there. A lot of people, what they end up doing is they run that under one entity. And so then the question there is like, how do I track that inside of the same entity? And there's some different tools to help with that. I don't know how much you recommend other tools, but one called Manage by Stats is a really great one to manage brands. But anyways, generally, if there's multiple Seller Central accounts, you can still run that through the same entity. It gets a little hairier trying to keep it all separate. So, because you don't want, the challenge is you don't want to have one brand that is making all the money and the other brand is pulling you down, and you think they're both equally profitable when you keep investing in both. Right. So
you want like one that's sucking money, the one's making money, and it's deceiving. Wait a minute, I need to know. Oh, this one isn't. This one is. What do I need to do with this one? Is it bleeding us dry? That's really good. What would you say is at the end of the year, because this is super relevant to everyone now, because tax season is coming. The end of 2017 just happened. You guys probably received your you'll receive it by January 20th, your 1099K, correct? From Amazon.
Yeah.
So if you made up to $20,000 per year or a certain number of sales, you're going to get that. What recommendations, what advice would you give to people? I know this is somewhat of a different topic, but it's relevant. Preparing for that. Like, what do they need to do now? Especially for someone who didn't track their expenses. They tracked nothing in 2017, man. So what are they going to do now when it comes to paying taxes? Because so everyone knows, the IRS, if you make up to a certain amount on Amazon. And again, I think the minimum is 20,000, and correct me if I'm wrong, brother, but the IRS knows because Amazon sends that in. PayPal, same thing. They send that in. So you have to do something with that. You can't just wait and hope that nothing happens.
Yeah. So the rule there is any type of credit card processor or payment processor, and Amazon Payments is one, PayPal is another. MasterCard, if you had like any type of payment processor, if you had one set up, the rule is if you have 200 transactions, it might be 300. It's either 200 or 300 transactions and $20,000.
Say that because I remember there were 2 2s in each side. Yeah.
Yeah. And then what happens is the payment processor will send you a report called a 1099-K, and they'll also send that to the IRS. So the IRS is saying it's really the checks and balances to make sure for the IRS to make sure people aren't selling stuff online and not reporting it. So, and that's actually a challenge some people run into is they're recording their own information. Let's say you make for the year, let's say you make $150,000 in sales, right? But your net payout after Amazon takes out their fees is, probably going to be around 30%. So you figure, I don't know, was that like $45,000 or something like that? So you'll make let's call it 110,000 in your payout for the year. Well, some people, they just call that sales, right? And they'll say my revenue for the year was $110,000 because that's what Amazon paid out to me. Challenge with that is Amazon is going to send a 1099-K to the IRS saying you made $150,000 in sales.
As if that was your profit, basically.
Mm-hmm. So that's a challenge that you run into. So what you need to make sure at the bare minimum is check your 1099-K, and whatever you file in with the IRS, you're going to want to make sure that your sales match your 1099-K. And I'm not saying it has to match exactly, but you don't want it to be significantly less. Because if you do, it's going to flag you. I actually just had a client the other day contacted me. I worked with him a couple of years ago. And the 1099-K got flagged for it. And actually the reason why is because I don't want to go down a huge rabbit hole, but he's what's called a cash basis filer. So he records his income as he receives the cash. And there was just a big difference, and the IRS contacted him about it. He's totally cool, but it just goes to show you if your 1099-K says is a lot higher than what you file with the IRS, you will get flagged and contacted about it. So that I think is the minimum. If you haven't done any record keeping, what I would try to do is take my 1099-K, use that as my income, and then try to figure out as best as possible what my cost of goods sold was, as well as any of your other business expenses, and write those off underneath. There's plenty of tax accountants out there that can help you. We have a team that helps. If you're brave enough, you can try to file TurboTax or one of those other deals. And honestly, I'm hoping to come out with a course soon to teach people how, because at this level, every dollar counts. But anyways, yeah, that's a couple of things to be aware of with the 1099-K.
That's really helpful, man. When people are recording their expenses, what categories do you recommend they create, and what kinds of expenses should they be aware of that they may not be? So for example, if you flew into Austin and I took you to lunch, and during lunch we're talking about the summit, which is a business, the summit that you're going to speak at, some people may not know, hey, that is considered meals and entertainment, that is deductible. So could you speak to some of the categories and maybe ones that people might miss, as well as PPC costs? I think you mentioned the sales commission, the fees that we pay to Amazon. I think that gets really sticky, because here you have these sales, then you have the fees that came out of that, but they're still recording the total. How do you break that down?
A lot of good questions there. So I'll just say a disclaimer up front. It's not an exact science. I think there's an underlying principle here that if you have an expense, you outlay money and it's tied to your business, there's a business purpose, I think you can make a case that that could and should be a business expense. Where it gets a little tricky is like a cell phone, right? Where you use that for business, but you also use it for personal use. And some people like to get really creative, if you want to say that, and they write that whole thing off as a business expense.
Right.
But the challenge with that is if someone was to come knocking and ask you about that, you're going to have to justify that the full bill should be tied to the business. So you just got to be. Some people are more risk averse, so they try to run more expenses through their business. And what I would just say is, at the end of the day, if someone came asking you what was the business use case for this, could you explain it and have a plausible and realistic reason behind? So that's just the principle that I recommend in terms of trying to record business expenses. And obviously that's open to interpretation, and actually that kind of freaks people out. Like,
sure,
accounting isn't always black and white. That's one of the interesting things about it.
It's cut and dry. That's one thing I learned when we first got an accountant who's also a CPA, is he mentioned this. He goes, well, you could include this as an expense and this as an expense, or you could call it something different. And I was like, really? I can do that? Yeah, this could be COGS or operating expenses. It could go either way. There's some gray area. He goes, what matters is that it's all provable with documentation at the end of the year. If Amazon, that's not bad, I associated the two. That was a bad Freudian slip. If IRS ever comes knocking on your door, you have the documentation to prove it. You have like literally sitting right over here, there's a little leather box here in my office. And every time we have a receipt, we throw it in there. And then my assistant takes that and she takes a picture of it and she uploads it to Google Drive and drops it in the categories that we need for every possible expense. And something that helped me a lot, man, was deciding how the names for the categories. Like, for example, one category might be market research. Someone else might think different and they would call that something different, like R&D or something else. But for me, it made sense because it allows me to be strategic with my money. Here's the part I love about accounting, man. And tell me if you think I'm crazy. The better I understand accounting, the more strategic I can be to build my business in a way that's smart. In other words, I want to take the data and not just say, oh, I have to report. Oh, I have to make sure it's legal. Yeah, I agree with that. We do. But how do I take this information and use it in a way that is smart and profitable? So for example, we have a product, every time we order it, we get 20,000 of it. It's a small product, but we get 20,000. It's a lot. Huge, huge, huge thing. And so all these boxes come in, but the reason I do it is because my numbers, my finances tell me that my profits are so much better when I order that size. And that's obviously a simple example. Another one might be, COGS. Oh my goodness, I didn't realize COGS was so much higher for this product than this one. So what can I do to reduce these, because these COGS are so high? Like, finances, they help me to be strategic, to know how to build my business because the numbers don't lie, What are your thoughts on that, man? And how do you what's important to me is I want a CPA or an accountant that understands that gets that,
Yep. Yeah, no, one of the things my mentor talks about is, the accounting as a science has been around for hundreds of years, much longer than tax codes. So believe it or not, there's a use case for accounting besides just tax reporting. So I think you make an incredibly valid point. Taxes are what we all have to. The way I like to say it is like doing your books to do taxes is just getting you in the game. It's like eating your vegetables, but to really get to the meat and the dessert of finances, you really have to dig deeper and you have to be strategic with your numbers. A really amazing example is I was talking to a guy recently, and what he started digging down into his FBA fees based on his weight and the dimensions of his product, and he found out that if he could shave 2 ounces off of his product, it would reduce his warehouse fee by almost like 80 cents to $1. He made an extra like 20% margin on his product just by going to his manufacturer and saying, hey, can we shave 2 ounces off of this product somehow, some way? And so he uses and you want to know, based on the volume he was doing, that was an extra 20 grand of profit in his pocket, just because he looked at his numbers. He realized, hey, this is what my margin is, and these are the drivers behind this expense, and how could I reduce this expense? Another way I like to describe it is like, you, as a retail business, you're not in the business of making sales. You're in the business of making margins. And the reality is, if you sell $10,000 worth of goods, but it costs you $10,000 to make those sales, you don't have a $10,000 business. You have a $0 business.
Right.
So the reality is, there's 2 ways to increase margins. You could either sell more, or you can try to reduce your expenses. Yeah. And the reducing the expense part is, I think, what gets often overlooked. Everyone's focused on.
It's more efficient because it doesn't require necessarily more work. It just requires more thinking and planning. Whereas selling more requires more activity, more work, more marketing, more promotion, more dealing with PPC ads and trying to figure out what works, what doesn't. That's really
another thing to think about is not every dollar is created equal. So reducing $1 of expense, you get to keep $1. But if you make an extra $1 of sales, you actually only keep maybe 30 or 40 cents of that dollar. So, if you cut your expenses by $1,000, that's kind of the equivalent of making an extra $4,000 or $5,000 of sales.
Yeah, this entire interview is worth what you just said. I just want to repeat it just to make sure everyone hears that. So if you have the option of increasing sales or cutting expenses actually can help you make more money long term. It'll cost you less time in most cases, and you can actually, cutting $1 gains $1, whereas increasing this doesn't, because you still have COGS, you're going to pay more taxes, there's all that involved. And we're not saying don't try to increase sales, but you got to know your numbers. This is one of the things in our program that we talk about all the time. Don't become emotionally attached to a product. I understand if you have more knowledge about it, you're going to be better at selling it. That is true. But let the numbers tell the truth. In market research, what do the numbers say? Just like accounting, what do the numbers tell me? And if those numbers are saying something different than what I feel doesn't matter. What the numbers say, that's what matters, because that's how you're going to make money. Knowing your numbers is so important. And I think it's like the least romantic possible topic. Like, who goes into business because they want, no offense to you, who I know you're an accountant, but you get it, right? Who wants to go into business because they can't wait to do their finances and their books? Like, no one thinks that way. They're like, no, I want to build this, this amazing machine that makes me money. I want to start up this new coffee shop. I want to launch this multi-million-dollar business on Amazon. That's the attractive part. But you've got to know your numbers, guys. You have to. Now, let me ask you this, and this has actually been commented below, Jeremiah. What about tools? What about applications people can use? Do you recommend QuickBooks? Do you guys have your own proprietary software? And if you do, please feel free to talk about it. Where does someone get started other than going to an Excel or number spreadsheet and dropping in the numbers?
Yeah, no, that's a great question. So for sure, like I said, the lowest hanging fruit, most accessible to anybody is a spreadsheet. That's the low. It's going to require the most work, but it's the cheapest to get into. So just assuming that's like you starting there, how do you go above and beyond that? There's really, what I found over the last couple of years, and just always being on the lookout for tools, there's kind of a few different levels. So like there's some tools that are around $10 to $20 a month that I think can really help start to take some of the load off. So one of the popular ones is called Daddy Bookkeeping. It's, I think, around $10 or $15 a month. They actually will hook up to Seller Central and start to pull out some of your sales data and your fees. So it's a really great option in the very, very, very beginning. At the same time, though, there's some limitations as you start to scale up. You're going to eventually, as you start to hit $30,000, $40,000, $50,000 of sales a month, you're probably going to end up switching. But for most people, I think they would be tremendously happy worrying about switching accounting systems if they're making 40 grand, in sales a month. So that's one option. Another one that's come out pretty recently is called Fetcher, Fetcher.com. That they market themselves as an accounting software. I would call it accounting light. There's still there's still going to be some manual data entry there, but it will track your Amazon sales and cost of goods sold. You'll have to manually plug in your expenses, kind of like a spreadsheet, but it gets you 50% of the way there, and arguably the tougher 50%. I think those are on the low end, $10 to $20. Going a level up, there's something called Inventory Lab. They have a model similar to Fetcher. It's just a little bit, particularly for arbitrage. So maybe in the private label community, it's not quite as valuable. But if you're in arbitrage, you definitely need something like Inventory Lab. If you're working with a lot of SKUs for some reason, you're going to want something like Inventory Lab. And then going up into like a really proper accounting system. Actually, let me retrace back. There's something called Wave Apps. That's another really popular lower level. I would call that kind of maybe mid-tier, where you can plug in your credit card and your checking accounts to that and that kind of thing. And there's some automation there. That's a really great, if you're trying to look to get a more official accounting system. That's not only because here's the challenge with some of the lower tools is they'll track your income and expenses, but you won't actually be able to track any things like loans. If you have, it may be difficult to see how much the value of your inventory you have in stock. That's what's called the balance sheet. For those who don't know, it's a record of your assets and your liabilities, and really the difference between the two, just a stored up value called equity in your company.
Talking about the equation, the accounting equation, right?
Yep.
I know this equation.
I know this. So some of the smaller ones, they don't have a balance sheet, and that's in the beginning, that's an okay thing but if you're trying to track loans and all that other stuff, it can be could be difficult to use some of those other tools. So moving up, what the kind of the household name is Quickbooks. They have an online.
Do you recommend Quickbooks? What do you like about it? What do you not like about it? In my opinion, and feel free to disagree, brother, it's too clunky. It's not streamlined enough. Like I looked at Bench, I looked at Zero, looked at other ones that seem a little more streamlined. But the problem there is they didn't go in depth enough. Bench was not customizable enough. At first we loved it, then we're like, forget it. Then finally we went and got an accountant. So like pros and cons, Quickbooks is probably the most famous. What do you really think about it?
Yeah, so one is they have a lot of they have a lot of different versions, right? So there's a desktop version back in the day, like Dinosaur software. Now they have an online product. Right. What I say is it's a good product. It's the challenge is they're trying to take older software and they're trying to convert it to this cloud-based ecosystem.
What it feels like they're trying to update instead of just building it brand new and simple and clean. Do they have any kind of plugin? And great question, Matt Combs. Do they have any plugin you can use that you know of that works with Seller Central? Yeah. They do. So
they do. So there's something called A2X accounting.
A2X. I'm gonna write it.
The number 2, the letter X, and accounting. Actually, the tool it actually stands for Amazon to Zero. It was a tool originally built for the Zero cloud accounting platform. And just because so many people use QuickBooks, they now support QuickBooks. But that's like my go-to tool to connect. And it's a very, it's a more robust system. So, for people that are willing to invest, I mean, it starts at $20 a month, which can be a little steep for an add-on, but it saves a lot of time. And it's always accurate. Like it's never not accurate because they pull reports directly from Amazon. So honestly, right now in the small business accounting marketplace, there's QuickBooks online, and then there's a platform called Xero, Xero.com. And those two are really duking it out. Like it's sort of a David Goliath kind of battle where.
Can you repeat it just one more time? They were
Yeah. QuickBooks is on the one side, QuickBooks Online, and the other one is Xero. Xero, kind of like Xerox without the X.
Yeah. Okay.
And so they're actually a New Zealand-based company. They took over New Zealand, then they went to Australia, took over Australia, and now they're starting to take over the UK and the US market. And they were built straight for the cloud. So it's a very it started as a cloud-based ecosystem, and it has some really, some really good streamlining and power features that are actually they reserve it for accountants. So there's some features there that I really like and appreciate. And not only that, but it's kind of user-friendly too. Like they don't, in accounting, they don't, there's that debits and credits, and that freaks people out. And which one
they hear that word, they think my debit card. Like, wait a minute.
Yeah.
Yeah.
And so Xero, I think they've tactfully called things like money spent and money received, or it's just for someone that's not an accountant, it makes a lot more sense. So I personally prefer Xero. But then again, I would say when I got started, Xero was the superior product to QuickBooks Online. Yeah. And I think over time they've started to level out the competition. I think
better.
What's that?
I just say because QuickBooks is getting better.
Yeah, exactly. No, that's what in my opinion, QuickBooks is getting a little bit better, but on the whole, I would say they both get you to the same end result. Most of the reporting is all the same. I think the means to get to that end is a little bit different, and I prefer the means,
right?
For Xero. So.
Yeah, I feel like I'm a nerd right now. Like I'm having fun talking about apps. Like my business partner beside, he would be all over this, but this is cool. Like this is. I hope we're not boring you guys. This is fun. So let me ask you this: Cloud Cart Connector. Matt in the chat here asked about that one. Are you familiar with it? And if so, what do you think? Pros and cons.
Cloud Cart Connector. Yeah. To be honest with you, I've not used Cloud Cart Connector. But just by the name, I've seen a lot of apps grow up, so I kind of have a feeling I know what this is about. So what people have started to create, and I can't speak for it, but a lot of people are trying to, it's difficult to try to connect your accounting system, like your shopping cart. So if you're on eBay, if you're on PayPal and eBay are the same thing, but if you have Shopify, if you have Amazon, it's difficult to try to record all of these sales from all these shopping carts. And so people are trying to make these connectors or these integrations. And one of the things I'd just say, there's a lot of people that make integrations. And just a pro tip for anyone that's trying to consider one is if they try to bring in an invoice or some type of, if they try to record in the accounting system one invoice or one transaction per sale, you're in a world of trouble. Like a lot of times, if you make 100 sales on Shopify, what these apps will do is they'll create 100 invoices for all of those 100 sales. And that makes a lot of sense when you're in the beginning, and it's easy from the integration side to do it that way. But when it comes to actually doing your accounting and bookkeeping, it's not scalable. As soon as you're making 1,000 sales a month, you want to be matching 100. Like what happens is like Shopify, they have a daily payout. Yeah. So you might have 20 sales in that payout. So then you're going to try to figure out which 20 of these invoices goes to this single payout. You end up paying someone to make your life more miserable. I hate that.
And which one were you talking about? Which tool?
There's almost all of them are that way.
All of them. So, have you tried Bench? Have you tried Bench?
Yeah, so I haven't. They're basically an accounting services firm that built their own software. What I've been getting is they're a good person. They're basically a good company to maybe get you started and get it off your plate. But like you said, it's not very customizable, and it can be difficult to scale with you. So I don't have anything negative to say, although I just feel what I've heard from folks that have switched from Bench to our firm is there's just some limitations. So eventually you start to hit And I don't know exactly if that's from a sales perspective or if people just want more interesting reporting. But from what I understand, it's a fairly solid service. The other challenge too is it says they help so many different people. You may end up working with a lot of different reps from time to time.
Because we loved how easy it was to set up. We loved how automated it was. What we didn't like, this is going to be totally open, keep it real here, is the people who we talked to didn't seem to know what they were doing. We would talk about COGS and they couldn't answer our questions. It was like all they were doing was just to plug in numbers. And it was really frustrating. I needed someone with a little more knowledge. I need them to know more than me. So I didn't need a whole on financial strategy, but that was really frustrating. And then the second part was when we wanted to break it down to more specific categories, like here's all our income for this category. Here's all the income for this store. Here's our income from our coaching and all these things. They couldn't do that. So it wasn't customizable enough. And it was too streamlined. So that's why we ended up going with just an actual accountant who lives here in Austin, who's been awesome. Well, tell me, brother, a little bit about, go ahead, what?
What platform are you guys on? Bureau, you use QuickBooks Online?
No, he has his own. It's called Paget Business Services. He uses his own software.
Oh, so, nice.
Yeah, I don't know if you heard of them. They're a chain. So they built their own accounting software because that was one of the first questions I asked him is, do you guys use QuickBooks? And they said, no, we have our own. So I don't actually have access to it. I log in online and it has a folder and I click on the folder and it gives me all the reports, like the financial reports, cost and profit and all that, profit and loss statement. But we don't I don't log into the software. He logs into our PayPal account. I give him access to our Amazon accounts, give him access to everything with limited, obviously, for trust reasons. So they take care of all that for me. So I don't have to deal with it. But the cool thing is anytime I have a question, I call him, he'll answer it. Like it helps me to understand, which is good for him. That means more business. It also means more automation because the better I understand, the fewer questions I have, which makes it easier. Brother, talk a little bit about exactly what you guys do. How do you guys help people? Why would an Amazon seller love to work with you guys? And again, everyone, Jeremiah is going to be at the summit. He's going to be teaching this in depth at the summit to help you guys with your Amazon businesses. A lot of you guys ask, what is the new private label? It's what we're teaching at the summit. And I'll give you guys just a hint. We're private label. This is our expertise. This is our specialty. This is what we live, breathe, drink, sleep, everything. We are doing a huge emphasis on new products. How do you develop a new product, completely new, never seen the light of day on Amazon, and build that out and differentiate it in a way that utterly crushes the competition because no one else thought of it? And there are ways to do that to de-risk yourself because you find a need in the market and you find a different means to meeting that need, a more efficient means. So it's a completely different product. It's not the same product, but it accomplishes the same goal. So you know the market is there. People need this fulfilled. There's a bigger gap on education, obviously. We have to educate them so they understand the value. That's where your risk is. But in the end, you make a lot more money that way. So a ton of the summit is going to focus in that direction. That's what we mean by the new private label. And I believe that is where people should be thinking if they want to stay on the cutting edge of Amazon. And what I love about it, Jeremiah, is we have so many different kinds of people. Some people doing 7, 8, 10 million a month. They're doing better than we are. And other people who have doing 10, 20, 30,000 a month. And they have like this niche that they're really, really good at. And they're going to teach that. And that's the part I love is the variety. But back to you, Jeremiah. Tell me more about what you guys do. And guys, I'm going to give you a website. And just so you know, inside the field, get paid this. This is something we want to provide you value. But I believe in what Jeremiah does. That's why he's on this show right now, is I believe in what he does. MuseMinded.com. If you get a second, go there. MuseMinded.com. and check it out and see if that's something, I just chatted it, that is helpful to you or that you're looking for. But explain it more, man. Tell us about it.
Yeah. So, I got into space about 3 or 4 years ago. It was actually a little over 3 years ago at the end of 2013. So, end of 2014, excuse me. And basically, I was taking anybody at the time, and I had a mentor that was feeding me some e-commerce clients. What I started to realize about 6 months into the gig is all my clients that were focusing on Amazon were killing it. They were just like lights out, being all the other eBay sellers, Shopify sellers, whatever. So I decided to niche down and focus on Amazon, on basically sellers that were focused on the Amazon platform. And for the last 3 years or so, I was just doing bookkeeping, getting people set up on accounting systems. Where I started to realize there was a big need for folks that aren't ready to pay someone a monthly deal every single month. So we created courses for folks to do it themselves and essentially teach the exact same accounting automation system that I use that takes 30 minutes to an hour a month to do our clients' books. And we teach people how to set that up and do the whole system exactly the way we do it. And then we have an outsourced service. So for folks like yourself, Seth, that are trying to leverage their time to grow, their business, they just don't have the time. It doesn't make good business sense to focus on doing it themselves. So they outsource us for a few $100s a month. Right now we're about $300 or $400 a month, depending on the size. We're working on getting that price down, but our whole goal is really to democratize financial control. So we want to make financial control accessible to every Amazon seller, no matter if you're just starting up or not. And so that's what we've been laser focused on for the last 9 months, is building a service that we could scale up to serve hundreds of thousands of people. And then beyond that, we're building a service that gets people, like you were saying, take care of tax compliance, but we want to stop, instead of just looking backwards, we want to start looking forwards and proactive. And we're actually building something called a Great Game of Amazon, where we're going to teach people the financial rules, what makes Amazon businesses tick, and really how to win at the game that is Amazon from a financial perspective. So we're building out a growth consulting kind of program for our clients, and we'll likely spin those off into courses. But for right now, it's just going to be a service that we're going to launch in the next few months. But anyways, we're essentially a bookkeeping and tax firm, and then we have courses as kind of an add-on.
That's awesome, man. And just, I'm answering a couple questions in here as we're going.
Yep.
The part I like about what you said is you guys are offering consulting, so you can help actually strategize, not just, oh, here are the books. This is what I didn't want, man. I didn't want a bookkeeper. I didn't want someone who just plugs in the numbers. Anyone can do that. I can have my VA, my assistant, my team do that for me. But someone actually understands the strategy part, so they can actually help us use that wisely, because numbers are only as good as you use them. And guys, remember this, just having the numbers isn't enough. Just being legally compliant, that's good, but that's not good. You want to optimize it. Just like your listings on Amazon, you want to make it as good as you can. So Jeremiah is someone I believe in because I know him. I know his brother. I actually interviewed his brother like a month or two back when we were in Seattle. That was pretty cool. And he's going to be at the summit. And for those of you guys who asked, when is the summit? The summit here, I'm just going to give you, Gabby, I'm going to give you the link right here. It's March 11 to 13. And for those of you guys who are Just One Dime members already, who are part of the program, remember this too. You get 2 special workshops that are super in-depth, taught by coaches. And we're going to break off into groups and walk through products together. These are 2 hours long that no one else gets. These are like very special in-depth workshops. Also, one more thing, we have a special panel where we're going to have a whole bunch of different Amazon sellers and teachers and lawyers and accountants and other people like that sitting on a panel doing a 60-minute live Q&A session where you can ask questions and they answer those questions for you. But the biggest part, and this is the part I look forward to the most, Jeremiah, whether I was brand new or where we're at today, is just the people, is getting to meet the people and the networking. And there's going to be investors there. So those of you guys who are looking for someone to invest in your business, go. Those of you guys who are investors and you don't have time to work in an Amazon store, but you got money, you're like, I got 50,000 here. I'd like to turn this into a passive income machine for my kids. Go and find someone who knows what they're doing, but they don't have a lot of money. Invest in them. Make a partnership. This happens all the time in the Just One Dime community. It's not just a bunch of coaches and students. It's a movement. It's a movement of people who are teaching each other how to crush it on Amazon. Okay, guys, that link didn't work. JustOneDime.com summit. Really? Guys, click on it really quick and tell me if that's not working. That should be working. Page not found. Uh-oh, this isn't good. I'm clicking on it right now, and oh, that is odd. Okay, thank you. I'm going to get that fixed immediately because that should be working.
I got into it. I typed it into the URL, justonedime.com/summit.
It worked?
Yeah.
Oh, okay, it works just now. Maybe it had a glitch. Try it again, you guys. Quick, here, I'm gonna repost it. Try it one more time. That was weird. It wasn't working for me first. That is so weird. Unless I type it in, it's not working. That is strange. I'm gonna have our team look at this. Guys, just type this in, justonedime.com/summit. And you can learn more about Jeremiah there as well. Yeah, sorry about that, guys. Yeah, just go to justonedime.com/summit. Just type it in. It's really weird if it's not working from the chat box here. Yeah, click on the other hyperlink. John, just type in justonedime.com/summit, and that should work for you. Okay, cool. So 3 things to leave with you guys. Number 1, and I think this is worth the entire interview, know your costs, reduce them so you increase your money. Number 2, if you want to know more about that, go to Muse, and I'm going to type it in here again, museminded.com. Again, I'm not an affiliate. If I was, I would tell you. I don't get paid for this. Museminded.com. That is Jeremiah and his team's website where they provide accounting, bookkeeping services, as well as consulting strategy services for your finances. It sounds like there's different tiers to it. Jeremiah, is that correct?
Yeah, no, so that's that Grove Consulting is a program we're coming out in the next couple of months. So
okay, awesome. And WK Dravena, I'm so glad you mentioned that, and I keep forgetting the mentions to people. So the ASD shows, you guys know, is overlapping with the Just One Dime Summit. We're actually going to take people on a tour into ASD on the last day. So for people who can stay there for one more day, we're taking a whole group of people. We're going to teach them sourcing and factories and suppliers and how that works, walking you guys into the ASD show at the Las Vegas Convention Center, which we're super excited about. So yes, that'll be a part of it. There's so much more, guys. It's crazy. Awesome. Guys, I hope this has been extremely helpful to you in your journey. I want to leave you with this encouragement. When I started Amazon, I had 0 experience. When Jeremiah started Amazon in accounting, he had 0 experience. We had to work and find a way to make it happen. Do what you need to do to make it happen. And remember, your greatest opponent is yourself. Get yourself out of your way so you can succeed. Own your junk so you can grow and learn. Stay teachable and humble, and you can make it happen. And if you're right now at a point of discouragement or things aren't working well, don't blame it on people, because that's just like reinforcing your failures. And I don't consider them failures. Consider those failures opportunities to get stronger. Find a way. I have failed so many times. Ask my wife, she'll tell you. But you know what? It's being honest about it and working through it and learning from it that helps me to keep going. And that is why I love the people in Just One Dime, because that is the mentality and the attitude. That's what helps you to succeed, and that's what makes a difference in the world. Yeah, absolutely, Marion. That's awesome. Thank you again, Jeremiah. I look forward to meeting you in person, brother.
yeah, it's going to be great. See you guys there.
All right. See you guys. Take care. Bye.